Central banks, digital currencies. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of Heise Says US. Grab your stein of coffee or your mug of joe, and let's have a look at this article from CNBC discussing central banks and their push towards digital currencies. The Fed was contemplating pushing out a digital currency with a wallet to help stimulate the economy. Now, I've looked at this in videos on my other channel, just concerns about the power digital currencies could give economists. And, well, they are very power hungry, and they really like to exert control and influence people to help for the greater good, to stimulate the economy. Just imagine if you received your digital currency, or your welfare paid as a digital currency, that had an expiry limit, or you could only spend it in certain areas. I mean, we can't have those welfare people coming to the nice suburbs. Well, is it then a store of wealth, or just an inducement to be a consumer? That's the natural evolution of mankind, isn't it? It's rather depressing if you think about it. So, after Facebook shocked policymakers with its plan to launch a digital currency last year, central bankers have been forging ahead with discussions on how they could create their own virtual money. Now they've come up with a rough framework for how such a system could work. On Friday, the Bank for International Settlements and seven central banks, including the Federal Reserve, ECB, and the Bank of England, published a report laying out some key requirements for central bank digital currencies, or CBDCs. Among the recommendations the central banks made were the CBDCs complement but not replace, sure, cash and other forms of legal tender. We'll see. This is just the first step. They want to get people used to the idea before they push it on you and jump you in, and that they support rather than harm monetary and financial stability, which is, considering central banks just intervene in the economy and manipulate it to all ends, seems just ludicrous. They said digital currencies should also be secure, as cheap as possible, if not free to use, and have an appropriate role for the private sector. Yes, it's to spend. It's to be your little tax farm spending citizens. The report on CBDCs comes as various central banks around the world consider their own respective digital currencies. Well, we already have China now is pushing out a digital yuan in Shenzhen. $10 million, you sign up, and then you're in a lottery for a chance to win $200 worth of it. And you can spend it at a certain select group of retailers. But this creates the point of, centrally controlled money to the point where, what if you're the wrong political ideology? What if your opinions aren't appropriate? What if you haven't got the highest social credit score, so you're not allowed to buy food for a few days? What if the government detects that you're overweight, so it can only let you buy certain things? It can be quite terrifying, everyone. And I'm concerned that people are going to line up and just dismiss all the concerns and just adopt it like nothing. Blockchain, the technology that underpins cryptocurrencies such as Bitcoin, has been touted as a potential solution. It could be, but it'll be centrally controlled. So all the benefits of a decentralized cryptocurrency are out the window. It'll give all the government absolute control. They can track every single transaction. They know where every dollar will be spent. What if they want to stimulate the economy in a certain part of the city? Or what if someone has political leverage in crony capitalism and wants your dollar spent at their businesses to instantly get a 10% bonus? This is just crazy, the potential for this. It really is. There are some advantages to having the traditional system. However, cryptocurrencies have drawn a lot of scrutiny from central bankers. With many concerned they open the door to illicit activities like money laundering. Well, everything opens the door to money laundering. Come on. In China, a country where digital wallets like Alipay and WeChat Pay have seen widespread adoption, the central bank is already partnering with a handful of private sector companies to trial an electronic currency it's been working on for years. Meanwhile, Sweden's central bank is working with consulting firm Accenture to pilot a proposed e-krona currency. A design that delivers the features can promote more resilient, effective, inclusive, and innovative payments, said Bennett Curry, the former ECB official who now leads BIS's innovation efforts. Although there will be no one-size-fits-all, CBDC due to national priorities and circumstances, our report provides a springboard for further development and workable CBDCs. It's worth emphasizing that these central banks aren't taking a stance yet on whether they and other institutions should issue digital currencies. They're still looking into whether such virtual currencies are feasible. Advocates for digital currencies say they could enhance financial inclusion by onboarding people without access to a bank account. But there are concerns this could leave out commercial banks. Oh no! I mean, that's the one advantage of Facebook's Lbry currency. It would provide a whole lot of people who are bankless with an opportunity to bank. There are some advantages to it, and it wouldn't be tied to any particular currency. Sure, Facebook would have control of it, but you're not forced to use it, are you? Whereas with our Australian dollar or the US dollar or the EU or anything, you're forced to use it to pay your taxes. And the government wants that control. The central banks want that control. That's why it's probably a much more legitimate threat to their control than cryptocurrencies, just because of the ease of use. Imagine just walking into a shop and tapping your phone and paying with Facebook monies. Can you see that happening? I can see a lot more normal people adopting that. You wouldn't have to be as technologically capable to use a crypto. That's the thing. It's just not easy to use. I don't care what anyone says, guys. It's not easy to use for the average punter. Your grandmother can use Facebook. She can't use crypto. Central banks' work around digital currency appears to gather steam last year after Facebook introduced its own version, Lbry, which is backed by a coalition of companies including Uber and Spotify. The troubled project was met with an intense regulatory backlash, as well the departure of high-profile backers like MasterCard and Visa. Yeah, of course, they want their own control. MasterCard are getting in bed with the central banks of these CBDCs. The group overseeing the initiative, called the Lbry Association, has since scaled back its approach, opting for multiple currency-pegged cryptocurrencies instead of the previously proposed single digital coin backed by multiple currencies, which is kind of a shame, because it could have been a threat to some of the government-controlled currencies, and that's why they couldn't have it. Well, there you go, guys. Central banks pushing for CBDCs. Quite concerned at the potential implications for this. What do you all think? Are you a fan of them? Do you think it will impact crypto, or will people move to more harder currencies? Will we go back to the traditional precious metals? As always, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or KuCoin. You can buy merch from Heise Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. Have a great day, and I'll see you next time.